what kind of strides do you think Indian economic growth can take uh, on the back of this tremendous set of reforms that are almost unique to India, the Jam Trinity, UPI, and the ease with which those payments happen vis-a-vis the rest of the world. Uh, how do you think that has put us in a position to be able to roll out the next phase of growth for the economy?
See, I think the economic growth that you're going to see is going to result in much better tax buoyancy. I think there's good amount of tax buoyancy you're going to see out of GST, income tax, and various things over the course of the next 3 to 5 years. That is going to help government revenues in a very, very significant way. So, having said that, there is a challenge. Between 2008 and 2021, the central banks across the world printed money as though there is no tomorrow. That has resulted in inflation across the world. So I don't think the next 10 years the central banks will be able to print money the way they could print money from 2008 to 2021. So while we will have economic growth thanks to the good work done, we may not have such a buoyant market equal to the economic growth, because we are going to have the central banks having to withdraw liquidity, and it's not going to be like 2008 to 2021. 2008 to 21 possibly maybe the only period of time in the world where you printed money on a scale which was unbelievable, and that helped all asset prices across the world. So you will have economic growth, you will have tax buoyancy, but will you have unprecedented market returns? That's a question I'm asking myself. I don't have an answer. So, my belief is you're going to have better returns in debt, you'll have moderate returns in equity, and you will have all asset classes doing reasonably well, maybe, but not exceptional returns. And view only in equity or something like that. Maybe you will have returns in all the asset classes in the world.
Wow. So you are saying that much unlike the last decade, wherein a lot of people are used to stock prices doing well, even if the economy were not, that need not be the case. In fact, the economy may do really well, but stock prices may not necessarily do well.
Yeah, I'm of the view that for about 12 to 13 years, the central banks ensured that debt was a very, very boring asset class
Hmm.
where you got almost nothing in the world. So the central banks ensured that interest rates were kept down in most parts of the world. So I think that phase seems to have ended. So if that phase ended, you're going to have debt being a very interesting asset class everywhere in the world. So maybe the returns that you will get in debt will be just short of what you will get in equity, and therefore debt itself may be a much more interesting asset class than what you saw between 2008 and 21. In most parts of the developed world, you got zero between 2008 and 2021. That may not be the case. Even in India, I don't think 2008 to 21, I think, was the period where you got very low rates compared to what you got in the pre 2008 period. So I think that may be an interesting asset class till the time central banks go back to a QE world. When I ask many of my economic friend colleagues, they say we can't go back to a QE world shortly.
Wow. So Naren, okay, a segue from what we normally talk about, but do you reckon debt offerings and the debt products and the variety of investment of options in the debt side in India could could mushroom tremendously over the course of the next decade?
See, as you know, we have always believed in asset allocation. Most of the asset allocation products are a mixture of debt and equity,
Sure.
and those products have been actually invested by many investors. So we believe those products are already been launched by people like us and many others in the mutual fund industry. Even in debt, there are a number of products. They are all being seen by the institutional community in India. My view is that over the next decade they will be invested by the retail investors as well. Instead of people saying there's only equity and asset allocation, people would say now you will have asset allocation, debt, and equity, and you will reach a situation where all three kinds of asset products are looked at by the investing community.